People ask me, what is the path to becoming an IP strategist? Let me tell you how I got to be a billion-dollar IP strategist. From a young age, I was both curious and technically inclined, so I studied to be an electronic engineer. I had an international business career that brought me into contact with people like Michael Dell and Steve Jobs. I also continued my studies and over the years have accumulated more qualifications in medical AI, law, and business. This combination of technical, legal, and business intersects in a sweet spot of IP commercialization. Since then, I've managed billions of dollars of transactions with patents and trademarks. And why is that important? Let me describe a seismic shift in business value. Since the Middle Ages, wealth was based on the ownership of land and access to physical assets. In the Industrial Revolution, wealth also came to people who built physical infrastructure or owned the means of production. And just in recent decades, there has been a phenomenal shift. Back in 1975, the market value of the S&P 500 was 83% tangible and 17% intangible. With the arrival of companies like Microsoft and Apple, intangible assets increased in importance. By 1985, 32% of the S&P 500 was intangible. The emergence of other technology companies caused the intangible value to march ahead in the 1990s. Pharmaceutical and life science companies also helped this trend to continue into the 2000s, and now intangible value accounts for more than 90% of the market value of big companies. Having a rare combination of skills may just make you a peculiarity. There's a limited market for poets who play the banjo while riding a unicycle. But if you combine rare skills with a valuable market, you can see how IP strategy could make a valuable contribution. And then we add the last part to the mix. In recent years, investors slow down their enthusiasm for risky investments. But they do realize that to get returns, they have to deploy capital. So now they're back in the market, but they have much more choice and they're much more careful. Scandals such as Theranos and FTX have highlighted the need for better due diligence. And because the value of rapidly growing companies is more than 90% intangible, IP due diligence has become crucial. Investors want to know about those intangible assets that account for 90% of the company's value. They also realize that 90% of the risks to growth are invisible. If your company is successful, you will face inevitable IP risks. Investors want to know that you're ready to handle all of those risks. So because of the rare combination of skills involved, the huge increase in intangible value, and a heightened focus on IP due diligence, it's crucial to have world-class IP strategy if you want to attract world-class investment. If any of this resonates with you, comment below. We would be happy to have you join this conversation.